Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Thursday evening. It is February the 23rd. Tomorrow morning, our time, Eastern Time, USA, I am going to have an interview which we will record and make available later with one-to-one group. And this company is a conduit for us to some of the investor relations groups and peoples that can provide us with direct insight into different categories of investments. And in this particular instance right now, I'm exploring mining as a potential diversification on my portfolio. But since I'm still wearing my Mr. Oxy hat, let's look at energy for a few minutes. And there are a couple of things I want to share with you on the topic of energy. So looking at the EIA, so the U.S. Energy Information Administration's website, and we look at petroleum, and you can kind of see this little dip that we've had over the past few months or so, where the price for futures has dropped quite a bit. Now, obviously, it's been bouncing up and down, and you can see right at the bottom here is that time during April of 2020 when we dropped to $16.70 per barrel on the futures contracts. And man, if you had good timing, if you were blessed with good timing, you would have gotten in, boots and all, in energy at that time. Right now, if we look at the historical prices, we're sort of trading in the price range where we were sort of in the last quarter of 2021. So about 2 years ago, just over a year ago. So we'll have to see where it goes. I mean, currently we're sort of sitting with WTI at about $73 or so. In 2021, in July, we were at 72. Comparatively, if we look at February 2 years ago, we were only at 59, but a year ago, we were at 91. So quite a bounce from $60 to 90, 50% gain, but then, of course, a pullback from 90 to where we are today. So 50% gain and about a 20% pullback. Let's just take a look here and see if we can spot the reasons why. And we're looking for the anomalies here. I'm still on the same website. Now, when you look at the numbers here for the current week, crude oil, you can see we're down a little bit, but this is on a line-by-line basis. So if we look for the anomalies or the reason why, you can see that there's been a bit of a build in commercial, excluding the Strategic Petroleum Reserve, from 416 million barrels to about 479. Not material, not earth-shattering, but here is the reason why you have this massive drop. So a year ago, on February the 18th, there were 582 million barrels of oil in the Strategic Petroleum Reserve in the United States, and now there is only 371 million barrels of oil in the Strategic Petroleum Reserve. So we are down more than 200 million barrels of oil or oil equivalent in terms of the drawdown that the Biden administration has effected on the Strategic Petroleum Reserve. Now, if we quantify that, you could say a company like Occidental Petroleum produces just over 1 million barrels per day. So that's equivalent to about 200 days, which arguably you could say is almost a year's worth of production, or one entire Occidental Petroleum taken out of the mix. And if you look at a larger manufacturer, one of the super majors that is super cheap right now, like Petrobras, producing just over 2 million barrels per day, that's 100 days worth of production. So more than 3 months of production has basically just been dropped into the market. And that is really a primary reason why we see the drop in crude oil in terms of where we are today. When you look through these numbers, if you have the time to do so, or if you're interested in doing so, you'll see there's not a huge delta. Even if you look at the total stocks right down here at the bottom, including and excluding the SPR. So if you look at total stocks, including the SPR, so we're looking at this row over here that I'm highlighting now. A year ago, it was 1.7 million. Now it's 1.6. So it's actually less that is available right now in terms of total stocks. And if you exclude the SPR, the difference or the delta is about the same. So about 1 million barrels or so difference between the a year ago today and today, if you compare the two. Anyway, this is kind of boring stuff, but these are things that you can look at from time to time when you're looking for a reason as to why they are reporting a build or a drawdown in inventories. And remember, at the same time, these are government stats. They, even though they say current week, February 2017, and a year ago, it's already a week out of date, and it's also not necessarily correct. Let's do something that's a little bit more fun, and we look at 5 of my and your favorite stocks. I know some of these stocks might be your favorites and some of them are not. I've put them into alphabetical order just so we can keep track of what we're looking at here. BSM is Blackstone Minerals. DVN is Devon Energy. Energy Transfer is ET. Occidental Petroleum is Oxy. And XLE is an ETF. So it's like a catch-all, right? An exchange-traded fund that includes companies like Chevron and Exxon, which make up about nearly half, certainly more than 40% of XLE's holdings. So let's take a look and see where these are. All of them trade on the New York Stock Exchange. They're slightly different. So EMP, Energy and Production. MLP means a Master Limited Partnership. This is Blackstone Minerals. And then we have Oil, U.S. Exploration and Product, Oil, Gas Production Pipeline, another Master Limited Partnership. This is Energy Transfer. We have Occidental, which is Oil Integrated. And then we have XLE, which is an ETF. So it doesn't have a particular industry because it's like a catch-all that covers most of these energy stocks. We look at the technicals here, and one row that I want to highlight specifically for you here is the 20-day raw stochastic. Now, as a general rule, if we are below 20%, then these stocks are oversold. So you can see at a glance here, we have a couple. Remember the one in the middle, in case you can't keep track, is Energy Transfer. So that's the one that is least oversold. The rest, Occidental, Petroleum, Devon Energy, Blackstone Minerals, and what was my last one here, XLE, are all below 20. So they're oversold, which gives you an indication, if you're using the 20-day raw stochastic as a benchmark or a guideline, that you could probably nibble on these a little bit. Perhaps less so on Energy Transfer, where most of us, if you're long on Energy Transfer, you're sitting on a huge gain. So you probably do not necessarily want to nibble on Energy Transfer right now, but the rest of them are a buy. How much of a buy? Well, the analysts say today's opinion is a 72% sell and 88% sell. And the only one that I just said you shouldn't really nibble on right now, according to the analysts, is an 88% buy. We've got an 88% sell here and a 40% buy on XLE. XLE is one of those equities that you can pretty much just buy and hold because it's a catch-all. Exxon, Chevron, and another 10 or so top producers in the United States. You just buy and hold it, so you're not too much to worry about on XLE. How about performance, right? So on Blackstone, we're down a little bit. On Devon, we've kind of lost our shirt because of the last week or so. We're down about 16-17%. Small little uptick here, so a couple of outliers, including XLE, for example, and Occidental, 20% down since just August 23rd of 2022. So over the last 6 months or so, Oxy has given back 20%. Don't forget that just as recently as August 29th, so, just 5-6 months ago, Oxy was trading at $77. Now it's trading at like $58 or whatever. So taking a bit of a hit there. I would just hold them right now. If you want to buy any of these, you could possibly go back to my example of the 20-day raw stochastic here and say which one is the best to nibble on. And right now, ironically, that would be Occidental Petroleum. You can buy it sort of in the high 50s and you'll probably be okay. And for sure, you can buy some XLE, and definitely Devon is looking attractive right now as well in the 50s. These are all large companies. You can compare the sales here. So when you have the market cap, this is in billions, so 3 billion, 35 billion, 40 billion, etc. Even the XLE ETF has a market cap of about $14 billion. But look at the sales here. So Occidental is generating approximately 26 billion in sales. With a market cap of 53, so there's a 2x there. But look at this the other way around. So Energy Transfer is generating $90 billion in revenue, and it has a market cap of only $40 billion. What a sweet buy Energy Transfer has been for us. Thank you, Bulldogs number 1. Every time I mention Energy Transfer, I also have to mention thank you, Bulldogs #1, for highlighting that for us in the first place. Per share information, the thing that's interesting here is the dividends. Many of these are hold for the dividend. For Blackstone Minerals, it's currently yielding approximately 10%. Devon is a mix of a fixed and variable dividend. It was paying about 9%. You probably guaranteed about 6 or so, not too bad. It's pretty good. Energy Transfer yielding 30 cents here. It's a high dividend as well. It's about 8 or 9%. Occidental, you don't buy it for its dividend. You're buying it for the growth on the stock, and hopefully you'll get some and achieve some as well. And then, of course, XLE, I said you could just buy anyway, and it pays a little dividend as well. Now, if you're not using the stochastic as a benchmark, you can use the PE ratio, so the price earnings ratio for the TTM, which is the trailing 12 months. They're all comfortably below 10. The most expensive one, based on the price earnings ratio, is Energy Transfer at almost 9. The rest of them are just super cheap. So Blackstone Minerals at under 8. You got Devon now at only 6.5. Occidental is at 6.5. You can just buy these. They're okay as long as you are going to give yourself a time frame of perhaps 3 to 5 years or so. You'll be perfectly fine. The energy price is going to go up and down, and we don't know from a macro point of view what other surprises await. Obviously, we don't know about the situation in Ukraine and Russia, and when that conflict might end, hopefully soon. You also don't know what rabbit the Biden administration is going to pull out the hat next, and very often those surprises are not necessarily good surprises. But guys, that's sort of where we're at on an energy roundup. I know there are a couple of stocks that you have sent my way for me to look at. I haven't had a chance to look at them yet. It's also tax filing season, so I'll be doing some of that. But as I said, tomorrow morning, next thing I got to do is I have this meeting scheduled for us with the 121 group. And they're going to tell you all about who they are and what they do. It should be interesting. And then you can decide whether you want to attend some of their conferences, either in person or virtual. So on that note, this is Mr. Oxy for Thursday evening, signing off. And I'll be back again over the next couple of days with a final video that I will post to our channel on the 121 group, which will be the next video that I lay out for you guys to look at for your interest and education. So thanks for watching. I'll be back soon. Talk to you later. Bye-bye.